So I recently helped a self-employed couple whose bank had stopped returning their calls. Yeah, you've heard me right. They stopped returning their calls. And these people, they just needed to buy another house. They thought buying a home was off the table. It wasn't, but the bank quit returning their calls. You see, I'm going to share this story, but this story is going to have a few different details because it's a real client. They own a painting business. They had been getting closer and closer to retirement. And they'd been living in a two-story home for years, decades. They loved the place. They loved their neighborhoods. They knew everybody around them. But one of them had recently had to go through some major surgery, and the stairs were getting really, really, really hard. They weren't looking for a bigger house. They were looking for a one-level house. They didn't want to make an extravagant move. They just knew that at this stage of their life, they really needed something else. They needed something different. They also needed a substantial change in lifestyle because of the surgery. And they had lots of equity because they'd lived in this property forever. So, from a real life perspective, the move made sense. The challenge was is they went to their local bank and started the conversation with them, and they started going through all the paperwork through traditional finance, and eventually they stopped getting calls. No answers. They just stopped getting calls back. Nobody really explained to them what was happening, what was going on. And when their realtor finally got involved and the realtor referred them to me, I took a look at their traditional income. I looked at their documents. They were self-employed. They have a lot of opportunity with their taxes and how they produce their income to make sure that they're not paying taxes. It makes sense. But after legitimate business expenses and deductions, their taxes just didn't reflect what a traditional lender would be looking for. And this is what I want all self-employed people to understand. Uh, Just because you don't qualify traditionally doesn't mean that you can't buy a house. So now the question really became if traditional income doesn't work and documenting it for a traditional Fannie Mae Freddie Mac doesn't make the story work, is there another responsible way that we can evaluate the situation? Yeah, there is. And this is really important. Here's where being self-employed can make getting a mortgage very confusing. You're looking at your business and what can be going well and your tax returns, your qualifying income, but it can be very confusing because you're doing what you're supposed to do to mitigate taxes, but that's not the same thing as what a W-2 employee would do because they're going to get regular W-2s, regular paychecks every week. Self-employed, it's not like that. It can be different. Business owners have different types of expenses. They have deductions. They have material. They have tools. They have equipment. And you have to reinvest into your company every now and then. There's a bigger financial picture, and it's much more complicated when you're self-employed. This does not necessarily mean that your business is unhealthy if your taxes don't necessarily show the income that traditionally makes it happen. It doesn't mean that you can't afford a house, and it doesn't mean that the borrower automatically needs to qualify with another way, but there is other ways than traditional, and they do work. And it means that if somebody really actually understands the situation, they can help bring it back and help these people accomplish a dream because it wasn't really about much other than they were in a two-story home that needed to change because of surgery. He couldn't navigate the stairs anymore. And in this couple's case, we knew that they had operated a business, that they had the cash flow, and they had significant equity in their home. And there's a very legitimate way of wanting to make this move because of his situation. So instead of forcing the situation into one traditional method, we looked at another opportunity. We looked at establishing cash flow through bank statements. We can provide that works. Complicated income doesn't mean it's bad income. It's just complicated. Sometimes it simply means that we have to find a different legitimate way to understand what the business is actually producing. That's common sense. And this is where people sometimes think that, whew, I'm going into a bank statement loan. They misunderstand alternative lending. It's not to be some magic loophole. It still has to make sense. It still has to make sense. Alternative lending is not a workaround. It's not a workaround. A bank statement loan is not a way to ignore whether somebody can afford the house. We're still looking to see if they can afford the house. It's just a different documenting means where we stop asking whether it makes sense or not. We look at it from documenting it from different perspectives so that we can set the people up to win. And in this case, their win was moving from a two-story to a single story. With their situation, we reviewed their bank statements. We looked at what was going on with their situation overall, and the program had a method for evaluating the deposits and applying the appropriate business expenses and making certain assumptions so that we could see whether they would qualify or not. This gave us another way of determining their ability to qualify for this income with the income that they had. We still had to look at the new mortgage payment. We had to look at their other debts. We had to look at, equity coming from the sale. We still had to look at the cash and the reserves and everything else that goes along with that, and whether it made sense for them to really continue, because it's not about the mortgage itself. It's about the life after the mortgage and after they get the keys. Was there going to be a significant trade-off that would prevent them from moving forward? And this is a really good, important piece. The alternative loan was a little bit more expensive because we couldn't go through the traditional means of financing. It was a little bit more expensive than the traditional means. But what matters is after we talked about it, there was also another cost. And the big cost was suffering through not being able to get to the second floor. Also, the cost of waiting, staying in a home that doesn't work because you can't navigate it, and delaying the move until the traditional income would actually qualify. In their case, it would have taken them 2 additional years to actually change their taxes so that they could actually qualify. So the question wasn't about the lower cost. It was really about, does this look like a responsible option to help them with their best overall outcome? Yeah, is this responsible enough to help them accomplish their needs in buying the next house? Alternative financing should never mean lower responsibility. The question is does it really help with the decision after closing? That's the real question. Does this decision still work after closing? You got to ask that question. And that's part of the story that matters the most to me when it comes to this specific case. Because if we'd only talked about the loan program, we would completely miss the point. We would completely miss the picture because the loan wasn't the goal. The loan was never the goal. The goal was making a transition that needed to happen for the family. Here's the part I don't want you to miss. It wasn't about the bank statement loan. They needed to move to a home without the stairs. That's the piece. And what's actually solving their problems by going through the non-traditional means of buying the home with a bank statement. If they had waited for the traditional, their business would have had to change, their equity in their existing home would have continually gone up, but their business would have had to change and they would have had to delay to buy this new home. But in this case, they had spent years building their business. They had plenty of equity in their existing home, and they had a life together that they had spent multiple times. But now their life was changing, and their current house no longer served that physically. So they had to go to a single level home, and something had to fit into the next chapter. And the medical situation was forcing them to do it sooner rather than later. They had to sell their existing home to be able to make this work and then use the equity towards a new purchase. And the resulting cash flow, when it was all said and done, actually worked very well. The new home, the bank statement loan provided a great solution for them. The points and prepaids and prepaid interest that they had to pay, which was a little bit extra because of the bank statement loan, it was tax deductible. It was a great setup for them. And they got the kind of home that they've been trying to get in the first place, which accomplished the physical needs. The mortgage wasn't the victory. The victory was getting the new home. Even getting approved wasn't the victory. The victory was in getting the new home that worked better for their lifestyle and for how they were trying to live. And that's probably the larger message that I want self-employed people to hear is that, yeah, you may have been told no. You may have been ignored. Your phone calls not returned because your income didn't fit a perfect box. Or you simply decided that they were too complicated and they didn't want to deal with you. Don't translate that into I can't buy. Sometimes the real answer is no, but sometimes the answer is not yet. But also sometimes it's finding another responsible way to make the situation work. If you're self-employed and your situation doesn't seem to fit neatly inside the traditional box, bring me your situation. Let's take a look at it, see what we can do to help you, and see if we can help you solve the problem. Because sometimes it's not about no, it's about maybe there's an alternative way to help you get where you need to go. We can look at what you're actually trying to accomplish, and we can look at your options and see what they exist and see if any of them make sense. Because the mortgage really isn't the goal. The goal is the life after the mortgage, once you get the keys. And in the case of this family, that's exactly what it was. They needed a lifestyle change because they had a physical change. And we helped them get it. I'd love to hear from you. Give me a comment, give me a like, give me a call. All the information is in the description down below.